June 19th, 2014, current time 10:42 GMT. Jay Meisler here with the daily Forex trading outlook. Before we go through charts, I'd like to talk about the FOMC meeting yesterday. It really was not so much what Yellen said, as what she didn't say, which was any concern over inflation or any hint of an earlier than expected rate hike. You know, the way this market's been trading, it's based on divergent monetary policies, the ECB moving one way, the Bank of England and the Fed moving the other way, but the Fed is not cooperating. So dollar longs got squeezed. The euro dollar popped above 136, and now we sit here still within that 135 figure to 136.77 range, but with a better bid above 136. So, you know, last night I posted on GVI, which is our professional forum that we moderate, this post, trying to be objective. If euro dollar clears 136 on a closing basis as well, there's little on charts until 136.77. So watch euro dollar 136 along with sterling 170 and even dollar yen 102 as U.S. sentiment indicators. So those are three levels you can watch, but most important right now is 136, is that's the euro dollar indicator. Now, one level that's worth noting is 136.69, which is a 200-day moving average, as that was a key level, a key battle level on the downside, and once established, you made a run for 135. So really 136.69 and 136.77 are key levels on top. Only through there would suggest a higher range. You got the 100-day and 50-day moving averages above 137. So right now we're kind of just still within that 135, 137 range. But there was an 8-day pattern of closes on 135 to 136. So we'll see if we close above 136, we'll break that pattern. It's moderately bullish. And the question really is, I think, can more positions get squeezed as opposed to the market getting bullish and buying euro? Now, if you look at the charts, I had mentioned this trend line here that needed to take out 135.03 to be confirmed. It wasn't. That trend line's been broken. You look at this chart, everybody's going to be looking at the same level here, 136.77. It's hard to type with this thing. That is your key level on top. On the downside, let's go now to the 4-hour chart. As I mentioned yesterday, you had the 100 period moving average. We took that out. You got the 200 period 4-hour moving average. And why that's important? Because we have not been through it since around May 7th and May 8th. So that's a long time. And if that gets taken out, then you have room on the upside. If that holds, then we are still within this 135 to 136.77 range. And that comes in today, right now, around 130. I think it's 136.62 or so. Now, if we go to the 1-hour chart, and then we're going to sum it all up. You got the 100 and 200 hour moving averages have converged right here. So that is, well, I'll get my drawing tool in a second. Let's see. We have, I drew the 136.50 level on top. As that protects those 136.69 to 136.77. If we stay below 136.50, then we are probably in a 135.50 to 1. Well, I'll get it. 1.30. Wish I could type better for like a 3-year-old here. 36.50 range. And if we're, that's good typing, huh? In that case, 136 is going to set the tone. So if we don't take 136.50 out, the focus stays on 136. That's going to set the tone within this range right here. And that's really what it stands. I mean, if we go higher to the higher of the day, we'll hit some stops probably. If we don't hit stops until take up 136.50, then we could gravitate somewhere between 136 figure to 50. On the downside, it looks like 135.85, which was around the overnight low and yesterday's kind of breakout level, needs to hold to keep the focus on 136 plus. So that's it really today. We have some U.S. data. And the U.S. data is going to take on even more importance now, as the market's probably going to have to lead the Fed rather than the Fed leading the market. For those who missed my article yesterday, why Forex trading is like World Cup soccer. It's telling me not only because the World Cup is going on, but because there is an analogy in it that you should watch, because it is something you should use for your trading. I think it's a fun article. It's an interesting article and insightful. So just click on the article here. We'll take you to it. I suggest you read it, and feel free to comment. Good luck and good trading.